In this busiest economic time, there are few who hesitate, keep asking for fundamental rights, not only for their employees, but also for financial health of the nation.
The arrest of S.K. Jain, CMD Syndicate Bank and MD of Bhushan Steel open a can of worms. Jain was arrested in first week of August for allegedly accepting bribe to enhance credit limit assigned to the company. The incident highlighted the issue of corruption in grant of loan to big borrowers. Even before arresting Jain, the CBI fought on its trail. S.K. Jain was talking with top managers of Bhushan Steel and another firm, Prakash Industries, for enhancement of their credit limits and in violation of laid-down procedure. Bhushan Steel is not an isolated case. Many news has come to light involving corruption or irregularities in public sector banks. In August 2014, the Finance Ministry ordered forensic inquiry of two public sector banks, Oriental Bank of Commerce and Dena Bank. The Finance Ministry received complaint that some officials of Dena Bank and Oriental Bank of Commerce had misappropriated funds earmarked as fixed deposit on August 26, 2014. A forensic inquiry was ordered on NPA of loan defaults involving another public sector bank, UCO Bank. Next day, shares of this publicly listed bank dropped nearly 8% at BSE and NSE, resulting in UCO Bank's market capitalization eroded nearly 3,500 crore rupees in single day. 2 days later, on August 20th, CBI registered a case against Bengal India Infrastructure for allegedly cheating Central Bank of India for 139 crore by availing loan on forged documents. The CBI probe for loan scams involving public sector banks is expanding rapidly. After a month arresting CMD of Syndicate Bank, CBI registered 2 more preliminary inquiries against UCO Bank and Bank of Maharashtra on the basis of information obtained from Pawan Bansal, a chartered accountant by profession, who was allegedly acting as a middleman between big corporate houses and public sector banks. On 1st September 2014, a Kolkata-based public sector bank, United Bank of India, declared Kingfisher Airlines and Vijay Mallya as a willful defaulter. After this company representative failed to turn up before redressal committee of bank, it also declared 3 other directors, Subhash R Gupte, Ravi Nedungadi and Anil Kumar Ganguly as a willful defaulters. Willful default is a situation where borrower has capacity to service but does not do so or uses the loan for other purpose other than what is sanctioned for. Once the entity of individual is declared as a willful defaulter, they cannot borrow money from banks or remain director in any company. Kingfisher Airlines used 6,500 crore to group of bank led by State Bank of India. State Bank of India has an exposition of 1,600 crore in the company. Kingfisher Airlines immediately approached Supreme Court against United Bank of India's decision. However, the Apex Court on very next day dismissed Kingfisher's plea, challenging bank's decision. It came before Parliament that the loan defaults or bad loans involving public sector banks have nearly doubled in last 3 years. Bad loans of public sector banks share a face with massive write-off. As per data provided to the government, NPAs of public sector bank is about 1,17,262 crore in 2012 and 1,64,462 crore in 2013. That raised to 2,27,264 crore in 2014. The RBI's global operation reports say that out of this 2.27 lakh crore loans, 95,758 crore is substandard loans, whereas 1,21,647 crore were doubtful and 9,859 crore were total loss. The worst part is that 2.27 lakh crore does not include bad loans by public sector banks. Public sector banks writ off 15,551 crore in 2012, 27,231 crore in 2013, and 34,620 crore in 2014. The quick calculation will show that the public sector bank foregone loans were 77,462 crore that will never be recovered, and also acquired fresh bad loans to the tune of 1.1 lakh crore in this period. In response to a question by Rajya Sabha member P. Rajiv, government told Rajya Sabha that the bad loan between 1 to 5 crore or less than amounting are 26.19%, whereas loans above 5 crore are 67.66%. The RBI has issued guidelines to prevent slippages. They stipulate that each bank has board-approved loan recovery policy. They told banks to share information on fresh and ad-hoc loans and renewal of loans to new and existing borrowers. Bad loans are an inevitable part of banking business. There is a risk, but in the last 2 decades, taking huge loans from the banks and making it as NPA has been routine practice by the big and corporate borrowers.
Any borrower, if the borrower fails to repay up to 90 days, above 90 days, then it is declared as a non-performing asset. So this is the definition given by RBI, and now almost all the banks are on core banking solution. So now the system recognition, the NPA comes to the system recognized method. Of course, there are questions whether banks interfere with the system and create dummy entries. Now that is a question and suspicion always there.
Bank employees are aware that it's a loot of public money.
This is the value of looking back 80 years. What you see is that we've seen such situations before. Early 2000s, we had NPAs which were significantly larger in the system. But that doesn't mean we can be complacent now. We certainly have to work on cleaning up.
In January 2013, the Reserve Bank of India issued guidelines for early recognition of stressed assets. This includes central depository of information on big loans. This would collect, store and disseminate credit data to all banks and all loans above 5 crore rupees. However, this system are not foolproof. To deal with the instances of corruptions, Reserve Bank has issued 4 master circular on classification and reporting in July 2014. This document contains guidelines how to examine various aspects related to frauds, including reporting case to CBI, Serious Fraud Office under the Ministry of the Corporate Affairs, and also to the local police. The circular also carries guidelines to carry staff's accountability, quick proceedings against concerned staff, steps to recover amount involved in fraud, claiming insurance wherever applicable, and streamlining the system. But the stringent conditions are often used to harass small and genuine borrowers. The case of Kingfisher Airlines, promoted by Vijay Mallya, is a classic example of loan default by big corporate house. It also shows off all the sprang of restructuring exercise.
I would put it this way. I think the problem has been recognized. Whether the entire problem in its, if you are talking about a 99.99 level of confidence, I don't know whether we have reached that level, but most of the banks know where they are, and with the push coming in from the Reserve Bank and the government to make sure that we recognize the problem, address this and move forward.
The time has come for all of us to sit together, see where we stand, what is the state of these anti-corruption institutions, what needs to be done to improve them, and in order to bring about those improvements, what is the kind of campaign that needs to be run in this?
Promoting industrialization at the cost of public fund does not serve the public interest. It merely amounts to transferring public money to private account. The information regarding top industrialists who have defaulted in repaying loans must be brought to citizens' knowledge. it may have some impact of shaming them and pay their dues. All India Bank Employees Association is carrying out relentless fight against defaulters and demands. Publish the list of bank loan defaulters of rupees 1 crore and above. Make willful default of bank loan a criminal offence. Order investigation to probe nexus and collusion. Amend recovery laws to speed up recovery of bad loans. Take stringent measures to recover bad loans. Do not incentivize corporate delinquency. Amend election laws disqualifying willful defaulters from contesting elections for public office.